Gas prices slumped 25% last year, saving middle-income households $477, according to a new study. And I'm joined now by Diana Farrell, the president and CEO of the JPMorgan Chase Institute, which authored this report. So, Diana, almost $500 in savings, and it's tax-free. This is pretty significant.
It's quite significant. For most households, it's 1% of their income, and that's a pretty significant raise if you want. For the lowest income households, it's as much as 1.4% more disposable income.
And what did consumers do with this money?
Well, they mostly spent it. They spent it on more gas, which reverses a 5-year trend of people spending less on gas and driving less. They're now driving more and using public transportation less. But then, very importantly, they spent it on restaurants and retail.
And in terms of restaurants, that sort of fits into this trend we've been seeing of consumers spending more money on experiences, right?
Exactly right.
And in terms of retail, was it more of an online spend? Because we know the retail sector has been struggling as of late.
True, but we actually saw both retail and online sales increase during this period. So the first category of spend that increased was restaurants. Then retail, we saw quite a bump to online sales as well. And we have seen online sales grow much faster than retail sales in general.
And what about saving money or paying down credit card debt? Anything to say there?
Well, we saw of the full savings that was the potential savings was actually a little higher than what they actually saved because they spent some more on gas than they had the previous year. But of the total savings, they spent 58% of it. 34% was on restaurants, retail, online, and 24% was on more gas. That leaves 42%. What did they do with that? Well, we don't see the spend on their debit and credit cards, but we do note that vehicle sales are up and savings are slightly up. So they did a little bit of all of the above.
And we should also point out that this data, right, was last year in terms of JPMorgan credit card spending, that data.
Yeah, I mean, what's really interesting about what the Institute is doing is it's not surveying people to find out what's going on. It's actually looking at real-time transactions of people going to the gas station, going to the retailers, going to the restaurants, and identifying what the difference is between low gas spenders and high gas spenders as a way to isolate what do we really know about the gas price impact. And it's brand new research on real data occurring in the economy.
And we've been seeing oil prices and gas prices coming back up a little bit in the past couple of months. Anything to say, you know, obviously you're privy to the data on what's ahead for this year in terms of consumer spending?
This study, as you mentioned, really looks at the course of 2015 versus 2014, and that over that period we saw a 25% decrease in prices. Prices have edged up a bit, but I think most people expect gas prices to remain low for some time to come. We do have this additional spend from gas prices, gas price declines in the context of a general slowdown in sales overall. And we document that in other work that we do as we look at debit and credit card spend across 15 U.S. cities. So it's hard to predict what's going on. The last quarter was a disappointment in terms of a real slowdown, and the March numbers that we measure were just around zero. But hopefully things will pick up a little bit in the second quarter.
All right, and we'll be following that. Diana Farrell from JPMorgan Chase Institute, thank you for coming by.
Thank you, Scott.
I'm Scott Gamm, and you're watching The Street.